Hello everyone, welcome to my YouTube channel. So in the recent few weeks, I have been uploading videos on topics related to payments. Hope you are watching it, you are enjoying it, and you are um, able to grasp a couple of concepts on payments. Today I bring to you one of the most important areas in payments, which we called clearing and settlement. So, if payment messages, which we have understood in the previous videos, if payment messages are the language of payments, then clearing and settlement are the actual operational machinery behind the scenes. So, we will look into this clearing and settlement today. Before jumping into the individual definitions and the concepts, let us build the clean mental model. So if you remember only one thing from this video, remember this chain: instruction, clearing, settlement, posting, and reconciliation. So this is a payment journey in a very simple language. So your introduction basically means somebody tells the banking system to make a payment. It may be a corporate, it may be a customer, a payment hub, or another bank. Clearing means the ecosystem, the payment ecosystem figures out who owes what to whom and under which rules. Settlement means the actual financial obligation is discharged between the institutions. Posting means customer or internal accounts are updated, and reconciliation basically means books, statement records, and accounting entries are matched. In simple words, your instruction is basically the request. Clearing is basically the preparation. Settlement is basically the actual interbank financial discharge. The actual interbank financial discharge. That is, this is the interbank network. Posting is the account. It's like the account update, and reconciliation is the final check. So this way, you can interpret this complete chain in a day-to-day or layman terms. Many beginners basically mix these stages. Um, for example, they think once a message is sent, money has moved. It's not always. So they think once settlement is done, the customer must see money. So again, this is not always that does not happen always. This slide just give you the basic model of the payment journey. With the map ready, let us zoom into uh, what is clearing. So clearing sounds like a simple words, but operationally it includes multiple activities. So at a practical level, clearing is the exchange, validation, sorting, matching, and sometimes netting of payment instructions between before the final settlement happens. So in simple words, clearing will basically ask you who owes what to whom. Is the instruction valid? Which bank should receive the payment? Which routing or which route should be used? Is this a batch item or a real time item? If it is a net settlement system, what is the final net position after offsetting the obligation? So think of it like a sorting center of a courier company. Parcel arrives from many senders. The sorting center checks the address, groups the parcel by destination, prepares them for the right path or right route, and only then dispatches them. So clearing does the payment version of that. Clearing does not always mean money has finally moved. A payment may be cleared, accepted into a batch, or included into a net position, but final settlement may happen later. So once obligations are prepared in the stage of clearing, the next question is how are they financially discharged? That is the settlement. So settlement is the stage where your obligation is financially completed, where your obligation is financially completed between participants. So now settlement can happen in different ways depending upon your payment rail, right? In an RTGS system, balances move across your settlement accounts. Now think of RTGS like a BIP express counter in a bank. Every payment is handled one by one. So when bank A sends money to bank B through RTGS, the settlement account of bank A is debited and the settlement account of bank B is credited. This usually happens in real time or near real time. That is why RTGS is used for high value and urgent payments. Now in ACH or automatic clearing house system, participant settlement accounts may be debited and credited after batch processing. ACH is more like a school bus and not a private car. It collects many payments together, processes them in batches, and settles them later in cycles. In correspondent banking, settlement would happen through account adjustments. For cross-border payments, banks may not always have a direct accounts with each other, so they use the correspondent bank Nostro and Vostro accounts. For high value payment system, settlement often happens in for high value payment system, settlement often happens in central bank money, because that reduces your settlement asset risk. We will discuss this particular point in the next coming slides. In simple words, settlement is not just message has gone. Settlement means the financial obligation between the banks has been discharged by moving funds or adjusting the account balances. So think of clearing as circulating the restaurant bill, and settlement as the actual paying the bill. Now, until payment happens, the bill may be calculated, agreed, and ready, but the obligation is still not discharged until you make the payment for the item or for the menu that you have eaten. Now let us compare the three most confused terms together: clearing, settlement, and posting. Clearing determines and prepares the obligation for you. Settlement discharges the obligation between the institutions, and posting updates the customer or internal account in the bank's ledger. So let me give a very simple example. Bank A sends a payment to Bank B. Clearing may confirm that Bank A owes Bank 10 million. So settlement means that 10 million is actually settled between Bank A and Bank B through the settlement mechanisms. And posting means Bank B updates the beneficiary account in its core banking or ledger system. Now, settlement and posting are not the same thing. Settlement and posting are not the same thing. It is possible that interbank settlement is complete, but the beneficiary account is not yet visible as credited due to internal controls, sanction review, account validation, core banking delay, cutoff issue, or posting failure. So, in a real banking project, this distinction between clearing, settlement, and posting affects the payment statuses. If you saw credited when only settlement has happened, customers may be misled. If you saw settled only when clearing has happened, operation teams may troubleshoot in the wrong place. Okay, so different payment system arranges this status differently. So let us understand why rails behave in a different way. Different payment rails optimize for different goals, right? Um, some systems prioritize your speed and finality, um, like RTGS. Then Some systems prioritize your scale and efficiency, like your SCH or other retail-based systems. Some systems handle cross-border correspondent relationships where banks may not hold accounts directly with each other. So a high value urgent corporate payment cannot wait for an end of the batch. It may need immediate finality. A payroll file, for example, a payroll file for 5,000 employees does not need 5,000 separate real-time gross settlements if a batch and net model can process it efficiently. That is why we must not only ask, is it a payment? We must ask which rail, what is the settlement model, what is the timing, what is the liquidity requirement, where does finality occur. In simple words, when you say rail, rail is like the road. So a motorcycle, a car, a bulletin all move things, but they are designed for different purposes. For payments, you have these rails like RTGS, Swift, your ACH, and other different payment systems. To understand rail design properly, we need to understand the gross settlement and the net settlement. Your gross settlement means each transaction settles individually. If there are three payments, if there are three payments, each payment is settled separately. There is no offsetting against the opposite obligations. This is the typical logic in the RTGS style systems. Then coming to a net system means many obligations are offset against each other, and only the final net amount is settled. For example, bank A owes bank B 100 maybe 100 million dollar. Bank A owes bank B 80 million dollar. Then bank A uh, the net position the net settlement position may be bank A paying bank B only 20 million dollar. So bank A is owning bank B 100. That is, bank A needs to pay $100 million to bank B. Bank B needs to pay $80 million to bank A. So in net, the bank A needs to pay $20 million to bank B. So this is what it is done under net settlement system. In simple words, gross settlement is like paying every restaurant bill separately, and net settlement is like friends going on a trip, recording who paid for what, and settling only the final difference at the end. Gross settlement gives faster. There are some benefits between using these two different settlement systems. For example, gross settlement gives faster finality and reduces the accumulated exposure, but it requires more liquidity for the bank. And net settlement is liquidity efficient, and suitable for larger volumes, but settlement happens later, and there can be settlement risk before the final cycle completes. Now let us apply the gross settlement logic to RTGS. RTGS. RTGS stands for real-time gross settlement. Real-time refers to the timing. Real-time refers to the timing. Gross refers to the settlement logic. Settlement means financial obligation is discharged across settlement accounts. In RTGS, payments are settled transaction by transaction. If a bank sends 10 urgent high value payments, those payments are not normally bundled and netted like a real batch. They settle individually, subject to the liquidity rules and the system availability. Why is RTGS important? Because it gives you first finality. It gives you first finality. First finality means once the money is settled, the payment is done and cannot be casually reversed. That is what first finality basically mean. Once settlement happens under the system rules, the receiving bank can treat the interbank obligation as finally settled. This is very important for high value, urgent interbank treasury and large corporate payments. But there is a cost, and that's a liquidity. So since each payment is settled gross, participants need enough funds or credit arrangements in their settlement accounts. If liquidity is insufficient, payments may remain in the queue. For contrast, let us now look at the ACH style processing. ACH basically refers to the automated clearing house, or a similar batch-based retail clearing model, right? So instead of each payment being settled individually in real time, payment files or batches are received, edited, sorted, and then processed. A classic example is your payroll. So a company uploads salaries for 5,000 employees. The system does not necessarily process each item in a as an urgent high value RTGS payment. It groups. It will group. It will then sort and clear items, identifies the receiving banks, calculates the obligations, and settles later according to the cycle. In simple words, automated clearing house is like a school bus, not a taxi. A taxi takes one passenger directly and quickly. A school bus collects many passengers, follows a particular route, and works efficiently for um, volume. Automated clearing house is efficient for high volume, uh, low value, and payments. The trade-off is timing and finality. So it is efficient, but settlement finality usually comes later than RTGS because the process works through settlement cycles. Now we must clear up another common confusion, that real time is not the same thing as gross. So many beginners say real time. Many beginners say RTGS is real time, and automated clearing house is net, and then they assume that real time always means gross, and batch always means net. So that is not the correct way to basically interpret. So real time versus batching describes the processing timing. Does the system process continuously or in batches? And gross versus net describes the settlement logic, right? Does each item settle individually, or are obligations offset first? RTGS is usually real time. RTGS is usually real time plus gross. RTGS is usually real time plus gross, and your ACH is usually batch plus net. But instant payment systems, maybe if we take UPI or any not NEFT actually, IMPS. These are this may be real time and may settle in different ways of depending upon a design. Some settle continuously in central bank money, and some have different funding or pre-funding models. But it will remain in real time. Remember this simple rule. So real time batch is about when processing happens, and gross slash net is about how obligations are settled. That is settlement logic. Now let us understand the asset used for settlement. Central bank money versus your commercial bank money. Central bank money means your balances or reserves held at the central bank. In major high value settlement infrastructure, settlement often happens in central bank money because it is considered the safest and most liquid settlement assets. Right? Commercial bank money means balances held at commercial banks like SBI, ICI, and all. Your normal bank deposit is your commercial bank money. in correspondent banking, settlement may happen through nostro and vostro account balances, which are commercial bank money relationships. In simple words, central bank money is like uh, settling directly on the safest official ledger, and commercial banking is like settling using balances maintained with the commercial bank counterparties. Now, why should you care these two concepts? Because the settlement assets affects the credit risk. The asset will affect you the credit risk, your operational design, reporting, reconciliation, and regulatory expectations. RTGS often uses central bank money, and cross-border correspondents often use the commercial bank money. Once once we know the settlement assets, we need to understand uh, a few more concepts like finality, risk, liquidity, and queues. Uh, Now, settlement finality means that once settlement has occurred under the rules of the payment system, it is it is final and irrevocable. You can't reverse it. Irrevocable through the ordinary processing. For high value payment system, finality gives certainty to participants and reduces systemic risk. For example, if you do any RTGS transaction, it's a final transaction. This transaction once gone, once successfully processed, it cannot be reversed. Then comes the settlement risk. Settlement risk is the risk that expected settlement does not complete as intended. This is especially important in deferred net settlement. This is especially important in deferred net settlement when obligations may be clear before final settlement happens. If a participant fails before settlement, there can be exposure. Then comes liquidity. Liquidity is the fuel of settlement. A payment can be perfectly can be perfectly valid, formatted correctly and approved by operation. But if the bank does not have enough liquidity or does not have enough money in the settlement account, the payment may not settle immediately. Then comes your queue management. Queue management happens when payments one wait because of insufficient funds. Priority rules. Um, then liquidity saving mechanisms or your cutoff controls. To a customer, this may look simple like payment pending, but to an operations or treasury team, it is a liquidity and queue management question. Okay. Now let us look at deferred net settlement and why settlement asset risk matter to the banking world. Deferred net settlement. Deferred net settlement means payments are cleared first and the net obligations are settled later at defined settlement times. For example, morning transactions are collected and cleared, but net positions are calculated and final settlement occurs in an afternoon cycle. For example, NFT. This is very efficient. This is very efficient because participants do not need to settle every transaction individually. They settle only the net position. But the trade-off is that final settlement does not happen immediately for each item. And in a real banking project, this affects your status design. If a payment has entered clearing but the settlement cycle has not yet completed, we should not casually call it settled. It may be accepted, processed, cleared, or pending settlement depending on the exact stage. Um, Settlement asset risk also matters. Central bank money has the lowest settlement risk. Commercial bank money involves exposure to the commercial bank where balances are held. Correspondent banking depends on the strength and reliability of those account relationships. Now let us connect this to Swift and ISO messages. Swift does not usually mean the money physically moves on the Swift. Swift is primarily a secure messaging network. Swift is just a messaging layer. It's a secure messaging network and a standard ecosystem. It carries the instructions and information between financial institutions. A Swift message or ISO 2002 text message tells the receiving institution what should happen, who is paying, who should receive, what amount, what's the currency, the value that charges, references, some settlement and remittance related information. But the actual settlement may occur through an your RTGS account or an ACH settlement account or a correspondent nostro vostro balance. So message and settlement are linked, but they are not identical. Think of Swift like a very secure instruction letter. The letter tells the bank what to do, but the balance adjustment happens on a settlement ledger or a account relationships. With the concepts clear, let us move into real banking examples. Example one is your RTGS high value payment. Here, a corporate sends a high value urgent payment, and the flow is from corporate to bank A. Now, bank A submits the RTGS settlement, and the settlement happens in a central bank settlement accounts. Bank B receives the settled position, and then the beneficiary account is credited. The business point here is your first final. This is suitable when payment value is high and timing is urgent, and receiving bank needs confidence that the interbank obligation is settled. But because it is gross settlement, Bank A will need sufficient liquidity. Coming to example two is ACH payroll batch. A corporate uploads salaries of 5,000 employees. The payroll file goes into the ACH batch clearing. Items are then sorted by receiving banks. Net positions are calculated. Settlement occurs in a cycle. In a particular cycle, receiving banks receive the settlement, and employee accounts are posted. The business point is that the high volume and low value efficiency. Payroll is a perfect example because the individual salary payments may not require urgent high value settlement one by one. Batch and net processing saves your liquidity and operational effort. Now let us look at instant payments, correspondent payments, and delayed posting. So instant payment example, in instant payment, an instant payment starts when the customer sends money through their PSP. The payment travels through the instant rail, settles in real time, reaches the beneficiary PSP, and the receiver account is credited. The customer gets the real-time payment experience, and unlike automated clearinghouse or batch system, there is no need to wait for end of the settlement cycle. Correspondent banking, in correspondent banking example, sender bank basically creates an instruction, um, either in Swift empty format or in ISO 20022 format. That message is sent correspondent to the correspondent or beneficiary bank processes it. Nostro Vostro balances are used and receiver is credited. Here the messaging layer and the settlement balance adjustment must both be understood. Now the delayed posting example is a very important one from our payment concept perspective. Um, Interbank settlement may be complete, but the beneficiary is not yet credited. What's the reason? So receiving bank processing may still be pending. There may be account validation, AML check, core banking posting delay, exception handling, or reporting delay. In simple words, settlement between banks Does not automatically mean visible in the beneficiary account at that same at that very point of time. This is why seller's wording is very critical. Now that we have examples, let us walk through the generic life cycle. The generic flow basically starts with the payment instruction receipt, then validations and screening happens. Validation basically check the format, mandatory fields, account details, payment eligibility, validate and scheme rules. Screening may include the sanctions, fraud or compliance check depending on the rail and the bank policy. Next is your clearing or obligation calculation. Basically, in some systems, this includes netting. Then settlement happens, where settlement accounts or balances are adjusted. After settlement is done, the beneficiary side basically processes the payment and post the credit to the customer account. Finally, reconciliation matches the clearing records, settlement confirmations, accounting entries, and the statements. In real projects, different systems may own different part of this entire uh, flow. The channel captures the request. For example, payment hub will route it. Clearing system processes it. Settlement infrastructure settles it. Core banking system will post it, and the reconciliation system do the matching. Let us now look at how this life cycle works in RTGS. The RTGS flow starts when a payment is submitted. The system performs your risk and format check. This check can include message structure, your participant validity, account details, value date, cutoff rules, sanction screening, or other bank controls. Then the key operational question comes: is there enough liquidity? Because RTGS settles gross, participant needs funds in its settlement account, um, or access to permitted intraday liquidity. If sufficient liquidity exists, gross settlement occurs through RTGS accounts. Once settlement occurs, finality is achieved under the system rules. Then the receiving institution can process the credit and update the beneficiary account according to its internal processing rules. If liquidity is not available, the payment may go into queue. This is why treasury systems or treasury teams monitor the settlement account balances and manages priorities during the day. Next, we compare the automated clearing house net settlement and cross-border correspondent settlement flows. In ACH or net settlement flow, a file or bets is submitted, items are sorted and cleared, net obligations are calculated, settlement happens during a defined settlement cycle, settlement accounts are adjusted, and then postings are completed by receiving institution. So the key idea is do the bets first and settlement later. This model is efficient for volume, but settlement finality comes at the cycle, not necessarily when the file was first submitted. In cross-border correspondent flow, the sender bank creates an instruction, a SWIFT or ISO message is sent. A correspondent or beneficiary bank processes it. Settlement uses the Nostro or Fostro balancer, and receiver is credited. Here, the banks may not both be direct participants or in the same settlement system. So, account relationship matter in case of cross-border correspondent flows. For someone who is a PA, the important question is which balance changes and where. Is it a central bank settlement account, an SCH settlement account, or a commercial bank Nostro account during the flow? Now let us address one of the most practical questions: when can a payment be settled but still not posted? The flow here is simple but very powerful. Clearing is done, Settlement is also done. Receiving bank validates incoming item, and then beneficiary account credit is posted. The important learning is that posting is an internal. This posting is an internal bank ledger event. Settlement may be complete between banks, but the receiving bank mm, still needs to process and post the credit to its own system in its own system. That can involve account validation, hold check, compliance check, core banking availability, and batch processing schedules. In a production support call, if a customer says the sender bank says money is settled, you should not immediately assume the beneficiary account must show the credit. Rather, you should ask, bank did the receiving bank receive the settlement confirmation? Did internal processing complete? Um, did core banking system post the entry, or is there a suspense or exception item? So this distinction is very useful for business analysts, testers, and payment and operations users, because test cases should verify not just settlement but also posting and reconciliation. Now let us map this activities to the actual system. So here we will see the system touch point. Okay, so now let us as a channel or initiation system captures the a channel or initiation system captures the payment instruction. This can be your internet banking, mobile banking, corporate host to host branch, teller system, or API channel. Then comes the payment hub or the routing engine. This system decides where the payment should go. It may choose RTGS or automatic clearing house routing, determine the urgency, settlement type, cutoff eligibility, and where the flow should be, whether the flow should be batch or real time. Then the next system is the clearing or the scheme processor. This system handles your batch intake, sorting, participant accents, obligation calculation, and netting where relevant. RTGS or market settlement or market infrastructure settlement infrastructure system handles your final settlement across different settlement accounts, intraday liquidity, and finality. Treasury or liquidity system monitors the balances, fund accounts manage intraday liquidity and release queues. Core banking debits, core banking basically debits and credits accounts. Reconciliation and accounting system match your clearing records, settlement records, statements, and ledger entries. In a real banking project, requirements usually fail when teams do not clearly identify which system owns which stage. Once systems are clear, let us see where messages fit. So messages are extremely important, but we must place them correctly. In RTGS or high value messages, high value systems, messages carry participant identifiers, amount, value date, and settlement related information. But settlement itself happens through RTGS infrastructure and settlement accounts. In ACH or batch system, files or messages carry payment batches, transaction details, institution identifiers, and settlement cycle information. The operator then sorts and settles by adjusting the settlement accounts. In correspondent banking, messages may travel through Swift, MT, or ISO 20022 PEX formats. Settlement may happen through Nostro Vostro account balances. So the message says what should happen, and the balance adjustment is how settlement happens. And in the status and reporting, messages may confirm acceptance, rejection, settlement status, account movement, or statement entries. But these messages are not themselves the settlement asset. Now let us discuss the common issues that appear in the real projects. Common conceptual misunderstanding number one is thinking clearing system. Clearing means settlement. Next is thinking settlement means beneficiary credit. Next is thinking Swift itself is a settlement system. Number 4 is thinking all real-time systems are gross and all batch systems are low risk. So these are not small mistakes. They can create this misunderstanding can create wrong requirements, wrong customer messages, wrong test scenarios, and wrong incident diagnosis. In RTGS, common issues might include your insufficient liquidity, payment queues, missed cutoffs, priority conflicts, and settlement being held pending funding. A payment can be valid and formatted correctly, but still not settled because the participant does not have enough funds at that moment. In simple words, RTGS is fast, but it needs fuel, and that fuel is a liquidity. Let us continue with the ACH correspondent and customer facing confusion. ACH and net systems can face batch rejection, delayed settlement cycle, and then participant outage, settlement risk before final cycle, and file level partial failure. For example, a payroll file may be accepted, but some items may fail validation or a settlement cycle may be delayed. In correspondent banking, the issues include message sent but balance not available, wrong routing, wrong correspondent state, cover payment not aligned with the customer instruction, commercial bank money exposure, and reconciliation mismatches those accounts. Reconciliation matches mismatches across accounts. Then customer facing confusion is very common. A customer says my payment was processed, but what does process mean? It could mean accepted for clearing. It could mean sent to ACH batch. It could mean queued in RTGS, settled in interbank but not posted, credited but not reported, or reporting delayed. So this is why status wording matters. As a BA, you do not design one generic status call process for everything. A good BA asks what exact business event the status represent. So we have status, we have accepted, cleared, queued, settled, credited, reported. So each of these status basically depict the event clearly. And with this, we come to the end of this session. Uh, hope you hope you are able to understand what clearing and settlement is, how the things look like behind the clearing and settlement. If you have any queries, do post your feedback or questions in the comments. And if you have liked this video, please do subscribe to this channel, and I will be coming with a new topic in the next video. See you there. Bye.